All right. Good morning, good afternoon, everybody. Welcome to another episode of Daily Rates with the Mortgage Calculator. We are a lender and broker licensed in over 20 states. And for our topic today, commercial loans. Obviously, we can do those in many other states as well. So what we do every day is we go over the live rates, go over the markets, a lot of news around rates lately. But we'll check out what's actually happening, pull up our live rates for today, and then we'll get into a deep dive on a specific loan type. Today we'll be going over commercial loans. I have three common scenarios. The picture there might be a little misleading. We're not purchasing giant skyscrapers here, but we're going to go over some more common requests that we receive here at the Mortgage Calculator. If you'd like to receive any full quote, the full loan estimate with all the itemized info that you need, please get with one of our team members. We'd be happy to help you out. You can visit our website or drop a comment here. Let me go ahead and switch my screen, and we will check out today's live rates for our most. So what we usually want to look at when we're talking about rates here is the 10-year Treasury. Let me pull it back to so the last 5 days, a lot of news been creeping up a little bit. If we check the news every day, there's obviously going to be some movement, but we always want to check. We're pretty much at 1 year and even 3-year lows in some cases. So a great time to be out there shopping or looking to refinance here if you are in the market. Let's check out our live rates for our standard program. So for today here, we always with a common scenario so we can compare the rates across all the different programs. So we set up here a standard unit, single family home, 500,000 purchase, 300 corresponds to 60% loan to value, 760 FICO, 40% debt to income ratio. That way we can compare all the programs across the board here, all the standard programs that we'll go over today, but there are dozens of options here on this page for all the different unique programs we offer. So first up, the conventional option for a when you think of a mortgage, typically a standard 30-year fixed. Rates come in today as low as 5.75, finally APR 6.020. If there's any reason our customer doesn't qualify for a conventional option, typically want to look at FHA, which allows more leniency on credit issues and a higher DTI, but does have additional fees, mortgage insurance. Rates today come in, appears a little bit lower, 5.25, but when you factor in all the fees there, the final APR at 6.155. So that's what we always want to hear, the different options. And our VA options for our eligible vets and active service members. VA programs are pretty amazing here. You see rates as 5, and the final APR much lower than FHA when you're comparing side by side there at 5.5 with lower fees for our vets there. And another standard option, USDA for USDA eligible properties. Those are the rural areas of the country are typically USDA eligible. If our property is eligible, our borrower is eligible, we may want to look at these rates as final APR 5.686. So our customer will typically be comparing that to FHA or conventional, and you see here USDA may be the best option in many. And where we love to shine the Mortgage Calculator are non-QM options. So just use alternative documentation and go a little bit beyond the standard agency and government programs look at here that everybody has to offer. So these are bank statements, 1099s, P&L statements, etc. And if you compare it to conventional, it's coming in at 6%, very comparable. Final APR to use alternative docs, very helpful for our self-employed borrowers who may need to use those alternative documentation methods. And we can investment properties as well. So once we switch over to investment properties, rates as low as 6.125, final APR 6.448. A little bit of change since the last show. And it's coming in at 6.125 also, final APR 6.438. So just a hair cheaper there overall than our alt doc options, but almost identical. And our DSCR, debt service coverage ratio options. These are some of our favorite non-QM options. No employment or income information needed. We simply rental property and determine if the rents can cover the expenses, aka the property cash flows. That's number 1, which is what we set for all the demos here. With 3-year prepayment penalty, rates come in at 5.999, final APR 6.307. And we can do a 5-year prepayment penalty there. Rates come in as low as 5.875, final APR 6.181. And these are smoke, conventional, and even our alt doc options. Amazing for our DSCR. And we can even do DSCR with no prepayment penalty there, 6.125 rate, APR 6.448, more in line with, but those programs are amazing. We have a ton of different options here. If you keep scrolling down, go to our page, get a quote for any of our standard options. I'm going to go into a deep dive today into some typical requests for commercial. So commercial properties, obviously not what we're looking at here. We're looking at standard single family home for all of our demos here. Once we switch into the commercial realm, it's quite a bit different, but we have some pretty. So first up here, we need to identify a property. So I pulled up LoopNet is the site here that is for commercial properties. So building, this is a typical request, a small commercial building. This is a little strip mall type of building. Retail building has 3 units, so there's 3, and it does say it's 100% leased. So this is a typical example of someone looking to invest. Looking cap rate here is how they typically list a commercial property based on the rents, but our loans are typically based on SCR, just a different kind of way to measure rated rents there. So let's check out our most common option. So here is our commercial, which makes it pretty simple. There are other commercial options, a little more complex, especially a lot of people have learned about SBA loan option to extremely high LTVs, but also have a lot of extra documentation requirements as they are government loans. This is our typical commercial option. So this is full commercial, very simple DSCR commercial. So for that exact 3-unit retail investment property, we can go up to 70% loan to value. And again, that's for that exact property. This does have a standard 5-year prepayment penalty, which is declining. So 5% year 1, 4% year 2, and so that is standard for these commercial options. And some rates here, pretty cool rates here, 9.49 rate. That's at discount points and costs. That allows us down, which is typical for these commercial loan options. And remember, we're going to base the loan on the DSCR ratio. Essentially, can rents cover these expenses, the monthly payment, plus the taxes, insurance, etc. So a pretty simple loan. And again, a couple of things to look at here. Again, we had a 5A set, and we did use that 760 estimated FICO. Other than that, standard 30-year fixed. A lot of commercial loans are balloons. These are very similar to our DSCR loans, just standard 30-year fixed loans, just a little bit higher rates, a little bit lower LTVs to do a pretty standard DSCR loan here for a commercial property. Now let's talk about a little bit of a different type of property. So these are all going to be pretty similar quotes, but obviously for very different property types. Commercial does have different options here. So this option here is for an industrial building. So this would typically be instead of an investment property where you're looking to get 3 units and lease it out, this would typically be owner. Looks like a previous company called Tinson Co. was here, and obviously they occupied the whole building, and they most likely owned the building themselves if they're down, or they were just renting it as the owner was an investor. So in this example, though, I'm going to go over our typical request. Which is oftentimes we get business owners that want their property for their business. So this would be an owner occupied. So the new tenant would be occupying this for their business. Very different than a property, but we can still use these pretty simple commercial loan options. This does have a higher price, but it is just a 1-unit industrial warehouse type. So in this case, we have an owner occupied warehouse. We can still go up to 70% loan to value. Obviously, we can do SBA loans and other specific up to much higher LTVs or sometimes lower rates, but that's on a case approval basis. This is a national option that works for major city with warehouse options. This does include the standard 5-year prepay. Rates are pretty much the same, just a much higher loan amount here, a much higher down payment. So still the same 30% down payment and still all the same setup here. So nothing much there about the rates or the setup. It is pretty standard across the board, even at higher loan amounts. And the final option here, another typical request would be an owner occupied property. There's an office building. So the office, again, just in my area, just popped up. Standard small office there in a downtown location, it appears. Just price in a little different setup with the owner occupied, but it's very similar quote. So here we have our office space. Still same setup here, 70% loan to value. And pretty similar setup here, 0.49 rate, discount points and costs, and that same down payment. So these options are amazing in order to offer our customers owner occupied commercial options and of course commercial options. And we do have other episodes where we go over our SBA loan options, which is kind of a particular subset of a lot of restrictions on SBA. But we can go to higher LTVs a lot of times on specific SBA options, but they are beyond full doc loans. They have additional requirements beyond just even a standard full doc loan. So very unique loan types there. These standard commercial options are the commercial options pretty much in any state. So please reach out to one of our team members if you'd like a full breakdown on any of the options we went over any of our standard programs, any of our non-QM programs, or commercial programs. So we'll see everybody back next week with another episode of Daily Rates.